Don't be paralyzed or beat yourself up about it because it happens.
And it probably happens more than you think it happens because social media has just destroyed us, I think, as business owners. Because on social media, you put on this life that everything's perfect, everything's going well, when really you're like a duck on water, right? Maybe all calm on the top, but pedal on the bottom, right? I've been in business for 15 years and I still make mistakes.
Welcome to Those Odd Numbers podcast. My name is Jason Snider. I'm the founder and CEO of Main Street Financial Group. We are your fractional finance team.
I'm Summer McFarlen. I'm a CPA and certified tax coach. I'm also the co-owner of Main Street Tax Group, where we do strategic tax planning so you can keep more of what you earn.
I am Masheka Turner, and I am the owner of Bright Skies Business Services. We are your outsourced accounting firm and profit first strategies. And we are here to help you create wealth through your business by gaining clarity around your numbers.
Hi, everyone. Welcome to another episode of Those Odd Numbers. I'm Summer McFarlen, CPA and certified tax coach, and I'm here again with Jason Snider and Masheka Turner. I think we have a pretty good and very interesting topic because we get questions, I think, a lot. Today's topic is, I started a business, what's next? So we want to talk you through, hey, if you just started your business, a lot of people start a business just by the seat of their pants, or it happens accidentally. They find a hobby or something that they're good at, and then all of a sudden it replaces their job, their income from their job. And here they are with a business and they don't know how to run a business. So we're just going to kind of go over a few things that you need to keep in mind now that you've started a business. And if you did it by the seat of your pants, which is Southern for, I didn't think this through. All right. So let's get started. Okay. So any ideas about where someone should start? Masheka?
So one of the things I see a lot is a lot of times people, they just want a business. They just want to own a business. And so sometimes people are just buy a business. It's not something they have a passion for. It's not something that they even heard about. It's just that they started getting information and it felt like something good to get in, and they started. And so I'm not here to say that's good or bad. I'm just saying those are the conditions that I see people getting into business. Now, of course, I have found that it does have a different flavor if it's something that you are actually passionate about or something that you've been into. It does take on a different flavor, but it could work either way from my experience.
Some other things that to be, there's things to do and there's things not to do. A couple of the two nots are, don't make any long-term commitments right immediately afterwards, unless it's required or inherent to your business. So let's say you're opening up a medical practice in an office space. Obviously, you're probably going to have to sign a lease, and that's going to be required, but plan for it. But don't make other long-term commitments that aren't inherent to the business would be one thing. And most of the financial commitments, spread out your cash usage if at all possible in the beginning. So if you have to buy insurance, don't make plop down a big chunk of money that's going to be tied away for the next 12 months. It may be better to make the installment payments over the 12 months available. So a couple of things of what not to do as well, in addition to the to-dos.
Speaking of cash too, even though we love to budget and forecast and all that, whatever the number is, add $15,000 or $20,000 to it. I'm serious because I have never seen it where it costs less or exactly what you think it's going to cost. So whatever the number
Usually
is,
more.
Yeah, there you go. So whatever the number is, add $15,000 or $20,000 to it.
Yeah, in startup phases, I always tell them, hey, do your budget and then multiply it by 3, and that's the capital you're going to need. Because 1/3 of that covers mistakes, 1/3 of that covers overruns, and the other is for all the things you didn't think about when you were planning your budgeting. Yeah, so you're going to want, for a pure startup, plan on tripling your initial capitalization cash needs.
And then as far as that mistakes, a lot of times when you hear that word, it becomes very paralyzing. But this is the thing. When you start a business, I hate to say it, every business venture that I have ever been a part of, and every business venture, just because at this point I've talked to a lot of business owners, there are going to just be mistakes and things that you did not count for. And don't be paralyzed or beat yourself up about it because it happens.
It happens, and it probably happens more than you think it happens because social media has just destroyed us, I think, as business owners. Because on social media, you put on this life that everything's perfect, everything's going well, when really you're like a duck on water, right? Maybe all calm on the top, but pedal on the bottom, right? So I would say I've been in business, I've had a business for 15 years. And I still make mistakes. Maybe they aren't as bad or as financially traumatic as in the beginning, but you still make mistakes. It's just we're human. You're going to make mistakes. So you're right. Don't let it paralyze you. If you need to talk to somebody about it, maybe a group of, I don't know if you can put together a group of business owners. We're all in Profit First professionals, so we can talk to each other about things. But with that, I think having a support system and having someone that believes in you, having somebody in your life that thinks you can do it and has belief that you can do it and realistically tells you can do it, but maybe also is there to be realistic with you when maybe you should think about doing something else.
There's a big fuzzy gray area when it comes to making decisions around, do I pull the plug? Do I continue on to something else? Do I keep doing this? There's not a lot of what would be the term, but specifics in the sense that, hey, you crossed this line, you should close up or not. There's been all kinds of stories, personal, at least from observations from other clients and friends who have gone through many of those barriers, if you will, to success after what I would have said pull the plug on. So it's hard for me to say, hey, this is how
Yeah.
it's out or not, and things, because a lot of it is more around the psychological aspects and the emotional impacts of starting a business, maintaining it, the stresses that accumulate, how do you deal with it? There's all kinds of different content out there that you can look into how to manage that side of it. But purely from the business side of things is don't make a lot of big financial commitments wherever possible in the beginning. Give yourself as much room as possible. And so one other thing I would say is, I forget who the person other I credit them with it, but they made a comment of, in the beginning, do things that don't scale, meaning don't try to make your business hyper efficient the first week out of the box. You need to get out there, get some sales, get some things under your belt, and then you can circle back to, hey, how do I make my sales process more effective, or how do I onboard clients more effectively down the road? Get the business in the door, learn from it, but don't try to make it hyper efficient the first 1 or 2 weeks of starting out, because you need that little bit of that grind to figure out what the value proposition that you have, learn how to run your business, but also that you don't get too far away from your customers in the beginning as well.
I think one thing that's important to bring up with that too is, unless you are buying a franchise business with things laid out, most of the time the business evolves. So it starts out where you think one thing, and then once you start doing it for real, you're going to see a pattern of what makes sense and what doesn't make sense. And so a lot of times what you thought was going to be, you realize, oh no, I need to adjust. And this makes more sense. I can run the business better, or this is more profitable. So also too, not being afraid to involve, because sometimes we think we have it all laid out. But if it's not working, it's just not working. So if we need to evolve, let's not be afraid to evolve.
Yeah. I think one of the maybe overused terms is life is a journey, business is a journey as well. There's things that you're going to encounter or go through. I don't think any of them are a singular, hey, I've made it type of event, outside of a few instances when you let's say, want to become a pilot or some other profession where there are some very critical criteria to be able to get into and then maintain your ability to be in that profession. But most of us in the entrepreneur and business space, it's a constant evolution, growth, trajectory. And I think one of the things was, it's not failure if you don't give up. And I used that term earlier, mistakes, in the sense of, I didn't say failure, I said mistakes, because mistakes are errors that you can learn from and grow from. Failure is when you've stopped trying or chosen to. And even if you stopped a business because you want to go do something else, or there's a better fit somewhere else, that also is not a failure. Failure is when you give up from what you're trying to achieve.
Let's talk about that reality though. What's the statistic by the SBA? How many businesses fail within the first 5 years? 80.
Probably so what I saw was like 85% or something.
Yeah.
Like
It's a
Pretty-
very high number.
It's pretty high. Yeah. So I don't want to be a downer, but more than likely it may fail. But I also think what we don't hear is there's a certain percent those who try and to do a business. Did I read somewhere it maybe takes 3 tries before you're successful? Something like that.
Yeah.
Does that sound familiar?
It does. I don't know if that sounds good. So we'll have to definitely look that up. But I'll say that's actually my story. This was my third business before it really popped off. So I will say, looking back on the first two, I didn't give it a fair shot. So on the first one, I didn't give it a fair shot. When it seemed like it got hard, I was done. And then the second time, I was working in corporate America. And I just felt like I could not leave corporate America. And when it came down to leaving corporate America or going all in, I just chose corporate America because it felt like it was safe. And then, of course, it rolls back around. And then this time I just said, okay, you know what? If it don't work out, you can always go back to corporate America. Your education and your credentials don't change. And so this time we started in January, and so we're still going.
Yep. You made it over the 5-year hump. So that's fantastic. I want to talk about a little bit maybe about some, practical things in case people are wondering. And like I said, a lot of times people start a business, they don't do a whole lot of research. It sort of just happens to them. I want to talk about in just a little bit. We won't go too deep into it, but about entity selection and kind of things like that, practical things, right? Okay, because I get asked this a lot by people that are thinking about buying a business or starting a business or something like that. So entity selection. And my advice is because they're gung-ho about it. They're excited, they're ready to go. And I kind of slow them down and say, just start with an LLC. If there's 2 of y'all in business together, or if it's just you, I would just go out and form an LLC. It's the easiest thing to form. It's usually the cheapest thing to form with your state. You do that with your Secretary of State, or I forget other states. Other states, I think, call it the Department of State. Anyway, there's kind of different things, but essentially it's your Secretary of State. So I would go out and do that. And I would make sure I have insurance as well. I think insurance is important. And then as soon as you can, I think you need to hire a bookkeeper and talk to your tax accountant. Get a tax accountant in your pocket. They can just give you some good advice. The bookkeeping, a good bookkeeper is just invaluable. And since we're all profit first professionals, I think everybody should read Profit First so they know how to manage their cash and work toward being profitable, right? That's a system that they can put into place, a practical system for cash flow management and profitability. Do y'all have any other tips on that?
The practical, yeah, I would agree with that. Have your basics there. Keep it simple. You don't need to be, again, like I mentioned before, you don't need to be really efficient and plan for 10 years down the road when you're making or you're netting 300,000 a year. You're not there yet. There's plenty of time to adjust. And also, there is a cost for complexity to maintain things. Super or highly efficient tax vehicles generally cost a good amount of money to maintain for compliance purposes, if you will.
Yeah.
So it's not something you need to jump straight into, that you need to be tax efficient from day one. Get some sales under your belt, get some revenue in the door, learn from your customers that you're serving your clients well, clients or customers. Then you can circle back. I can't think of a case other than early stage real estate investing where there's real property at stake, or a couple other things where it's an existing business. Those are different scenarios, but a brand new startup just getting out into the world, just starting at sales, doesn't need something complex for entity or tax management.
I do think it would benefit them to pay for like a 1-hour consult or something like that with a tax professional or profit first professional, maybe not a tax professional, but
Not TikTok.
That's where I get all my advice. That's on TikTok.
And I'm kind of glad you brought that up too, because a lot of times when people are starting entities, they kind of jump in with the advice of different people. And this is the thing. When you file that paperwork and you do this, the state or the county or the municipality, however, whatever you're going through, they do not care that you don't fully understand
Yeah.
the entity that you're getting into. they don't care. All
Looking
they
out
know,
for you.
they are not looking out. All they know is you filed the paperwork, and since you filed the paperwork and paid the fees, it is understood that you are going to follow the rules of that.
And you're going to
And
know the
so
rules.
that's it.
Figure it
That you're
out
going to follow the
perfectly.
rules and know the rules. And they don't care that you fully didn't understand that. It comes to a point, whether you're on a calendar year or a physical year, that you need to settle up. And it's understood and because I actually run across that a lot too. People on a physical year when they think they're on the calendar year, and vice versa.
Really? Most
Yes,
people are on a calendar year, but
most people are.
yeah,
A lot of times, what happens is people will do things.
they fill out
Sometimes
the form wrong.
they'll fill out the form wrong, or they'll pay people to do something.
Yeah.
And it goes back to what you said. Keep it simple.
Yeah.
Sometimes people will try to put you on this very complicated thing. And if you're just getting started, keep it simple. Because if you don't even understand the basics, and they're trying to put you on this complicated tax strategy, and you don't even know what you're doing, that causes even more problems. So
Yeah.
I have had clients do that. That some of them thought they were on a calendar, and I'm like, "What are you doing on a physical year?" Right? And they're like, "I don't even know what that means."
I'm a tax strategist, and I can tell you don't need a big old tax strategy starting out. I think you need some tips made about best practices on documenting your expenses and things like that. But tax strategy, maybe a simple tax strategy. We might need to do an entity selection analysis or something like that. But you're right, you don't need a full blown tax strategy immediately.
Or if you're going to get one, at least understand what's happening. Because I find that a lot of times people just don't fully understand. And again, you are on the hook financially for what's been filed on your behalf.
I was going to ask besides that, not knowing if they're a fiscal year or calendar year, I see people, they didn't know they were supposed to file their sales tax and things like that. And I'm like, I'm pretty sure I'm well versed. Actually, I'm not in Texas now, but I did a lot of returns in Texas. I'm well versed. And I'm like, I'm pretty sure that's one of the questions on the questionnaire that they ask you is what kind of business are you? And they send you this thing that says, hey, you're going to have to file sales tax. So that's one of the things I actually have run into.
I'm glad you brought that up, though, because that's actually important. If you're ever going to be doing sales tax, I'm in Tennessee, so we have a franchise and excise tax.
Yes.
If you Davidson County, a city business tax, and they don't care that you don't fully understand that, because I've saw that happen. Also, particularly when you start talking about sales tax and even payroll taxes, the penalties and fees can add up very quickly. So we need to understand if you are on sales tax and it needs to be filed monthly by a certain day, if you are one day late, the penalties and fees start adding up. Same thing with the payroll taxes. When people decide to put people on payroll, just get a full service payroll provider. Most people do not know enough about filing payroll taxes to really get into trying to file on their own. And again, because if you have an employee, that money is not even yours to begin with, first of all.
Yes, you're a trustee of that money. That's what I was thinking. That's what came to my mind. If you owe back payroll taxes to the IRS, you're in trouble. It's a trust, right? You're taking from your employees' paychecks and you're supposed to send it on to the IRS. And that's not bankrupt because it's a trust. It's a trust, right? If you have to go out and file bankruptcy because you didn't pay your taxes, that's not going to be discharged into bankruptcy. All right. What else?
Nope. Just going back, the sales tax money, the same thing.
Yeah.
The sales tax money is not your money. That money was the state's money from the get-go.
You collect it on when you make a sale on date, and then you are to pay it to the state.
So just really getting a trusted advisor to really go into it and at least know what's ahead of you. Because again, a lot of times this stuff is very easy to get into. But like I say, the state, if you need to file your taxes by the 20th and you do it by the 25th, the state does not care.
Yep.
They don't care. You did it late, so you need to do whatever penalties and fines that come along with that. And if you do it again, it just keeps rolling over and rolling over.
Yeah. Keeps accruing. Yeah.
Yep.
All right. Jason, any other thoughts?
No, I think I think we've scared the audience enough to be judicious before starting a business and think their responsibilities.
I tell you, I want them to be scared about that payroll and sales tax stuff. they need to be scared about that. That warrants
Yeah.
a nightmare, because it'll be a nightmare real quick.
There's no
Yeah.
easy fix for that.
Yeah.
No. And you know what? Actually, it's funny you say that, because I'm always surprised about people that are not. They're just kind of no big deal. And I'm like, you owe the state $100,000. This is a big deal.
Can I get on a payment plan?
Oh, and then speaking of that too, because that's another thing. Say if they do work with you and put it on a payment plan, if you file one item, even if it's a day late, that negates the payment plan.
Yes, it does. Yes, it does. I had that happen to a client. Yeah. That we're on an installment plan with Washington, D.C. And that happened.
So just be mindful. Like I said, anything that you don't know, get the advice from a trusted advisor, because going into business is very exciting, but it's also a big deal. And you are on the hook for everything you sign your name to.
That's right. It's risky. Owning a business is risky. I feel like it takes a lot of guts to be an entrepreneur, but we need people to be entrepreneurs.
Yep.
All right. Any closing thoughts, Jason?
No, I think got pretty as much as we can cover inside of a condensed amount of time, but I'm sure we'll have more detailed episodes of other practices and things starting a business.
Yep. All right. We will tie this one up for the day, and I hope you enjoyed it. And if you need help with anything, please feel free to reach out. Thanks, everyone. This content is for general informational purposes only and is based on current law and guidance as of the date of recording. Tax law and regulations are subject to change. This discussion should not be considered tax, legal, or investment advice. Listeners should consult their own tax or financial professional regarding their specific situation.